So much. Good morning, class, once again. Um, this class is a continuation of our classes on estimates, and it is also the class that was meant to take place yesterday, but due to the strike action, were unable to complete the class. If you could recall, last week we ended our class with demonstrating an example of changes in estimates. But this example that we demonstrated was a change in estimate as a result of the change in the residual value. Now, continuing with example 5, but now the difference being a change in estimate as a result of residual value, but instead of using the reallocation method, we'll do our change in estimate using the cumulative catch-up method, but for the same example. So I will share my screen, and from my screen, I want to share a workbook that we're going to use. In order for us to complete this question, we'll use my Microsoft Excel sheet. Starting from example 5. Example 5 says there is a change in estimate. Machinery was purchased on 1 January 20x7. So machinery is purchased on the 1st of January 20x7. Another thing is that this machinery had a useful life. So the useful life of this machinery was 5 years. Was 5 years. The same machinery had a nil residual value. It was 0. However, on the 1st of January 20x9, this machinery residual value was re-estimated to be 90,000. So initially the residual value was nil, but now it has changed to 90,000. Now, our question is that how do we account for this re-estimation of the residual value, this change in estimate on the 1st of January 20x9? Now, the first thing we're going to do on our required is that we have to calculate the effect of the change in estimate. How do we do that? So we're calculating this effect of the change in estimate now using the cumulative catch-up method. What is important is that when we calculate the effect of this change, we need to first of all know what was and what is now. What was the way the asset was accounted for when the residual value was nil compared to what it is now that it has changed in estimation and that the residual value is now 90,000. So in order for us to perform this calculation, we should have two columns of column A representing what it was and column B representing what it is. And then we create a final column which will represent the difference between A and B. Now, what was the cost of this machinery at the date in which we purchased it? We're given that the cost was 500,000. So the cost will still be 500,000. However, what was the accumulated depreciation? So the accumulated depreciation is the accumulation of all the depreciations. For an example, since we purchased this machine at the beginning of 20x7, so on 1 January 20x7, what was the depreciation then? How we then would calculate this depreciation for the column that represents the period before we had a change in estimate, or our was column, is we're going to say 500,000 minus the residual value. And in this case, the residual value is nil. So it will be 5,000 minus 0. And it is then the amount after deducting the residual value that becomes our depreciable amount. So therefore, we say divide by 5. So we would have a depreciation of 100,000. And that depreciation of 100,000 relates to the period of 1 20x7 to December 20x7. Because it is multiplied by one period, which is equal to 100,000. Now, for the same period, had we took into account the residual value, in other words, now we're trying to demonstrate the impact this would have had if the 90,000 was affected from the time this machinery was purchased. So instead of saying 500,000 minus 0, it would have been 500,000 minus 90,000. And now 500,000 minus 90,000, our depreciable amount, therefore, would have been 410,000. Now, from our calculator, 410,000 divided by 5 would give us 82,000. So 82,000 would be our depreciation for this period. And the difference between 82,000 and 100,000 is 18,000. Then our second calculation would be now the period between the 1st of January 20x8 to December. Now, essentially, because this is a straight line method, in each of these years, the effect would be the same. So in 20x8, 500,000 on the old estimation would have been 500,000 minus 0 divided by 5 in order for us to get a depreciation of 100,000. And in a similar way, taking into account the new estimation that this machinery now has a residual value on January 20 X8 to December 20 X8, our new depreciation would be 82,000. In other words, the depreciation for the current, for the 20X financial year would have had a difference of 18,000 when you compare it with before the change in estimate and after the changes in estimate. Now, then what would be the carrying amount difference at the beginning of the year, given the scenarios that we've just demonstrated? Now, the carrying amount at the beginning of the year in the old method is 300,000, because 300,000 less, 500,000 less the first depreciation of 100,000 and the second depreciation of 100,000 result into a sum of a carrying amount in the beginning, in the end of 20x8 of 300,000. But if from the beginning a residual value had been taken into account, the cost less the 82,000 residual value less the 82,000 residual value for the following period would have resulted into a sum of 336,000. Essentially, the difference would have been depreciation of 36,000 lower than old estimate. Now, if the same would apply for during the year, that the depreciation under the old estimates would have been 100,000. Yet, in terms of the new estimates, the depreciation is 82,000. And again, this essentially makes the old estimate of depreciation much bigger than the new estimate. So the new estimate is lower again by 18,000 in the current year. Now, apologies, the total sum of the difference, because we're using cumulative catch-up method of the previous period, will be adjusted for in the current period. In other words, for this period, you're going to add the effect of the change in estimate in the previous periods of 36,000 plus the effects of the change in estimates in the current year of 18,000, resulting into a sum of 54,000. Now, that represents the current effect. But we also need to know the effect of this change in estimates. Now, this is the sum of 300,000 minus 100,000 and 336,000 minus 82,000, which is 200 and 54,000, which the difference is the one that we accounted for here. Now we want to again do the calculation that will demonstrate what will be the effect of this change in estimate on the future depreciations. Now, the asset, it has a carrying amount at the end of 20x9 and under the old method, and 254,000 under the new method. In other words, using the old method without having a residual value, the entire amount in future will be depreciated. So the entire 200,000 in future will be depreciated. But the new method, because within the carrying amount of 254,000, there is 90,000 that relates to a residual value. So you only depreciate the depreciable amount. In other words, the residual value is what we expect this machinery to be worth at the end of its useful life, less cost to sell, the 90,000. So that 90,000, we don't expect it to be consumed through depreciation. So it should not be part then of the depreciable amount. In other words, it will not have a future depreciable effect. So therefore, we say 254,000 minus 90,000, and only 164,000 will be depreciated in future as far as this machinery is concerned. Therefore, what is then the difference between 200,000 and 164,000? It is 36,000. 36,000 will still, just like the current year's effect of 54,000, that 36,000 will be lower than the old estimate. Because if you notice the change here in estimate, unlike the other changes in estimate that we dealt with, where there was a change in estimation of depreciation. So you would have, for an example, the current effect resulting into an increase in profit, and the future effect would result into a decrease or vice versa. In this instance, because it is the residual value that changes, and the higher residual value means that there will forever be a lower residual amount. I mean, a depreciable amount. Now, if you've got a lower depreciable amount because of a change in estimating the residual value, it means that your depreciation is going to permanently be affected to be lower. Hence, we have lower again, even in estimating the future depreciation, right? And so there will always in future be a carrying amount. There will ultimately in future be a carrying amount of 90,000 when the machinery would have to, when the machinery would have reached its useful life for the entity. It will have 90,000. So then how do we account for the effect of this transaction? How do we account for the effect of this transaction? So the first requirement we've done, we've calculated the effect of the transaction. The second requirement says show the journal entries assuming that the depreciation has not been journalized. Show the journals assuming that it has not been journalized. So and so now we have to complete our journal entries. Now, in completing our journal entries, the first instruction says that we should show all journals, assuming that the depreciation has not been journalized in the current year. So we will journalize the depreciation with an assumption that it is the first time in the current year we put through the depreciation. Now, in the normal, in the old estimation, depreciation per year was 100,000 resulting to this machinery. But we know now that the change in estimate of the previous 2 years resulted into a difference of 36,000 lower than the old estimate when you combine 18,000 plus 18,000 of the previous 2 years resulted into 36,000, and then we've got 18,000 resulting from the effect of the change in estimate in the current year. In other words, now, because you are using a cumulative catch-up method, you're supposed to adjust the entire amount of the previous years and the current year onto the current year's depreciation, which is the difference between cumulative catch-up and reallocation method. Whereas we should have, if we're using reallocation method, we're going to just work with the carrying amounts effect moving forward on the carrying amount. But on this one, we're going to, first of all, take what would have been the effect in the previous years and the current year, adjust it in this year. So if now this effect on the depreciation of 100,000 is 54,000, you have to take 100,000 minus 54,000, and the difference, the cumulative difference, would be 46,000. And the 46,000 would be recorded in the current year. So you would then debit depreciation a depreciation expense of 46,000, and then credit accumulated depreciation of machinery of 46,000. Now it will be depreciation of, your narration would be saying it's depreciation of on machinery using a useful life of 5 years and a residual value of 90,000. But suppose there was already an adjustment for depreciation. So, but says show the journal entries assuming that depreciation had already been processed. So, which means there was already a debit of 100,000 and a credit of 100,000 on this journal using the old method of 500,000 divided by 5. So suppose you already had this transaction process, but now you've got this new information that there had been a change in estimate. What would you do? because now the new estimate is lower than the old estimate by 54,000, what you would do is then, because it is lower, you would have to now debit accumulated depreciation in order to reduce now the effect as a result of new change, and simply credit depreciation by 54,000. And then you would have adjusted for the effect. And then the last question is, how do you disclose a change in estimate? Now, your disclosure should always show the entity name. So you should include the company name that has been given to you in the scenario. You would also say this is relating to notes to the financial statements, and indicate that it is an extract. These are extracts because you just accounting for the item relevant to this question. And unlike when you are writing a statement of financial position, for the note to say for the year ended, as though you are doing a statement of comprehensive income, the headings should say for the year ended. And in this case, it's 31st December 20x9. And now for the note, you have effectively two sections when you're accounting for a change in estimate. You have the profit before tax, and before you write the estimates that are affected, you have to write this narration under profit before tax, and the profit before tax is stated after the following is taken into account. Is stated after taking the following into account. The original estimate, apologies, depreciation now relating to original estimate and depreciation relating to change in estimate. And because we always have comparatives in accounting, we have for the year 20x9 and for the year 20x8. Now for the original estimate, our depreciation was 100,000 this year, and in the previous year it was 100,000. Now with the new estimate, it's different. The previous year changed, 2018 to 20x8. There was an 18,000 difference, and there was also an 18,000 difference in 20x. But remember, changes in estimate, we only adjust them in the current year and the future years. So whatever the impact was in 20x8, unlike in a correction of error, it will be zero. It will be adjusted though in the current year using cumulative catch-up. So which means 36,000 plus the 18,000 for this year will result into this effect of 54,000. in our depreciation. In other words, 100,000 in 2008 less than zero would be still 100,000. But 100,000 less than 54,000 would have an effective depreciation of 46,000 in the current year. Now, remember, I said there's two elements to this note. So there was that element of profit before tax we started with. Now, the second element that we need to show in this note is explaining our change in estimate, showing our change in estimate. So before, we have to explain that the estimated residual value of the machinery was changed from nil to zero. We have to explain the actual change in estimate. The estimated residual value of the machinery was changed from nil to 90,000. And also, we indicate that the increase, putting the increase in brackets, because the increase in profits has a credit effect, and the decrease has a debit impact. Now, we have to indicate the effect of the change in both the current year's profit and the future profit. So we say the change in estimate in the current year, in the current year's profit is, as we calculated in the above journal, is 54,000, 54,000 being 36,000 plus the 18,000. And the effect in the future profits, because remember when we made this comparison here of 200,000, of 200,000 and 164,000, the difference was 36,000 lower still. So again, the impact in future profits is 36,000. What does this mean? Is that whenever you are depreciating, isn't it? The amount of depreciation is an expense that seems to reduce the profit that you will show in your profit before tax, isn't it? However, though, because the residual value changed as it increased, it will forever affect the depreciation both in the current and the future year. So the lesser the depreciation, then the more you're going to show more profit. Hence, both the current year's profits and the future profits, they will both have a decrease in depreciation, and that decrease in depreciation will result into an increase in profits. So that is how we disclose the changes in estimates. Thank you.